All right, all right. Hey, how's it going? This is Luis, the broker, coming to you. Luis Torres, the realtor here in the Chicago area. I'm excited to have you here in this video because in this video, I'm going to be talking about this week's news in real estate here, especially in the Chicago area. But not only that, I want to talk about the big national news that has been happening this week. I want to talk about the interest rates for you. And at the same time, I also have a little competition that I have going on where I talk about the local area here where I reside and where I serve the community as a real estate agent. In the Chicago area, basically the Aurora area, Naperville, Elgin, Joliet, and I pin them up against each other to see who has the most listings, who has the most closings of the week, who has the most new listings, and which of them out of the four competitors, I would say, have grown in the inventory. Okay, so we're going to talk about that here in this video. As I share my screen, I want to show you exactly what I'm looking at here. I'll also be delving into my local MLS to kind of see what the market is like right now as far as the listings go, and just give you a better idea of that. If this is your first time coming to this channel, I welcome you. I also invite you to subscribe if you are interested in anything real estate related. Here in this channel, I do talk about the news on a weekly basis, but I also go and delve into my cold call sessions. I kind of give you an idea of what it is like to work with me, because sometimes realtors are open about it. They have nothing to hide. I want to make sure that you're able to see what I am doing, so I do make these cold calls. I also make them competitive. I make them a little bit entertaining. I interview folks here as well. So if you are interested in that kind of content, I would definitely make sure to subscribe and like this. And if you don't like this information and this kind of work, obviously let me know so I can at least make some adjustments, so that way you are in the how can I say this to you in a nice way, right? In a way where I can just definitely take note and make adjustments. Okay, that's what we're all about here in this channel, is making adjustments if things don't go right. Anyway, the point of this video again is to talk about the real estate market, and that's exactly what I have been doing here. So as far as the real estate market goes, what I will do here is talk about what is the big news. Obviously, this past week we have seen that the mortgage interest rates have actually gone above the 7% interest rate marker. Now that is news that is unwelcomed in many eyes. A lot of buyers out there who have been kind of wavering back and forth with interest rates at 5% or 6%. I mean, not even mentioning those that have already left the market because they were looking at 3% interest rates and they didn't get them. They were looking at 4% interest rates and they didn't capitalize on it when the rates were going up. And then the 5% interest rates also were around and they didn't capitalize, and they were probably bought or at least discouraged from making any moves in the market. And now we're sitting at the 6% mark. The 6% interest rate mark has not been anything new. The last several months we have seen that interest rate be the actual norm, and many folks now, after over a year of adjustments, have grown accustomed to this and are understanding that, hey, you know what, the interest rates are going to continue to be this way for the time being. We don't see any indicator that the interest rates are going to dip below a 6% level, at least not for now. As a matter of fact, I'm going to click here on some of the things that I've seen. The debt ceiling has been averted. As you can see here, I'm looking at the NPR. This morning I saw here that the White House and GOP reached a deal in principle to stop the nation from defaulting. So that's a good thing, right? We're all excited about that, and it is important for the nation to pay its debts. It's important for everyone to pay their debts, right? So that is good news. However, anytime there's like good news in the market and that type of applause starts to come in, we see that the interest rates also tend to go up a little bit more as well. So if you are already exasperated, you're already feeling the pinch of the building of the home prices being so elevated as they are, and the interest rates also creeping up as well, this news right here of a deal being reached between the White House and the GOP about the debt ceiling is not going to make interest rates drop. No, it's not. Okay, it's actually going to make it even go further higher. And on top of that, as you already know, that there's a push by the Fed to control inflation. Let me show you real quick a chart that I was looking at here about inflation. Let's see here. All right, here it is, core inflation. If you look here where my mouse is, in 2015, you saw inflation at or around 2%. As we go into 2017, 2019, it stayed around that point, right? And then as the elections came, and then we had the new president come in 2021, it spiked up. Now, we already know that COVID pandemic hit 2020, 2021, and there was a recovery, and we did see, a big spike here as we see these interest rates with core CPI, PCE being at 5%, 6%, and now we saw here as the interest rates began to go up, elevate, from 2.8 to 3%, 5%, 6%, we saw that the inflation started to go down. And the issue here is that we don't know if that for the inflation is going to continue to dip, because the target is 2%. That's why the Fed is increasing the interest rates in mortgages, because they're trying to make this number here go lower. They want to bring it down to at least a 3 to 2%. That's where it should be, around that point. So as you can see here, this is the reason why we are having these higher interest rates. And so until it comes to that point, right now what they're doing is they're pausing the inflation of the interest rates to see what will happen. But as you can see here, it's not really, it looks like it's plateauing here. So this makes me wonder, hey, are we going to see a decrease in interest rates? I don't think so. And up here, we could see here, according to Mortgage News Daily, the 30-year fixed rate indices, as we've seen here from May 2021, we did see interest rates right around 3%, hovering at that point, all the way until about May 2022, as we started to see about exactly a year ago now. We're in May 2023, okay? Exactly a year ago, we were around 4% interest rates, right? So we already started seeing the ticker start going up from January 2022, and we started to see it go up until it peaked at around December or so of 2022. Interest rates were at 7%, or November, I want to say, and now we see that 7% marker hit once again around in this time, May. As a matter of fact, according to this website, we are at 7.14% interest rates for 30-year fixed rate. You say 7.14%? Whoo, that's pretty high. Well, I got some news for you as well, okay? If you are, this is just for folks that have, good credit. What if you have different kind of credit, right? See, this is what I want all of us to understand, is that not everyone has the best credit out there. So even though 7.14 is the credit, it's only based on, whether or not, based on many factors, right? But one of the big factors is your credit score. So what I did here is I wanted to, take a look here at NerdWallet. And here in this NerdWallet, see if I can actually find it right here. I'm going to hit X on this. Let's see what happens. All right, great. This is a cool tool right here, NerdWallet. It's how to compare today's mortgage rates, right, basically. Now, this was written a year ago, but the principle still applies, because what we're going to do right now is basically go ahead and see how we can, let's see, compare today's rates. Okay, so let's say that we're going to buy a house. Let's just imagine this, right, as we're looking at the news and how it affects you. Listen, the reason why I'm doing this is to show you how it affects your wallet right now. That interest rates are at 7.14, but I want to show you really what it would look like with your personal score. So let's assume that you're going to purchase a house. I already put in here. Let's put in actually a more round number, right? Let's put in a house that costs $300,000, right? You say, I love this house. I want to purchase this home. I'm going to put down 20% down payment on a conventional loan, right? So 30-year fixed. There you go. And then let's say your credit score, though, is at a 660, okay? So we're going to put fair. And let's see what other filters there are. Single primary, I'm not a resident. I'm not a veteran. And FHA loan eligibility, I'm eligible. Okay, here we go. And then the zip code is 60506, just a suburb here in the suburbs of Chicago. All right, so to purchase one, we did find one with an interest rate at 7.375. Another one here is at 7.75, right? So these are just an example of what the jump would be if you had a different credit score. Let's say that you have a 620 credit score. What will your interest rate look like? Is it the 7.14% that we see? Well, no, actually it's going to be at an 8%. 8% interest rate for you. You see how keeping a great credit score is helpful for you? Let's say that you had poor credit, right? 580, let's say. Well, your interest rate will be at 8% according to this one, okay? So these are just numbers based on this. Now, don't use this as a model for everything, because these change every single day, right? And the different lenders will, provide different ones, especially, wherever you reside in, okay? But that's just an example of what that will look like. And according to this, the monthly payment for this one will be $1,762, according to this, right? So take that with a grain of salt. I want to let you know that that is the state of the market as far as interest rates go. Now, listen, the inventory is still at very low levels nationwide, right? I mean, even here in the suburbs of Chicago, namely in Aurora, we have seen that that the monthly supply is at I believe it's a one month supply. I could definitely take a look at that for you and see what that would look like right here. So I'm going to actually go ahead and look at InfoSparks just to give you an idea of what the area looks like. So let me just look up here. The code that we have here is 507. All right, check this out. What is the month supply for April of last month? There we go. 1 month supply. You say, what does that mean? 1 month supply basically means that if there were no new properties coming into the market, it would just take 1 month for all those properties to sell. You know, theoretically, right? That's what it means, 1 month. What is an average balanced where, you know, both sides have equal leverage mean or look like? 6 months. 6 months is what it would look like. A balanced market. So if there's 1 month supply, is that a buyer's market or a seller's market? Who has the advantage in this one? Well, it is the sellers because they're the ones that have the leverage because they have that limited supply. There's one house for sale and then there's 15 buyers. That's what it looks like. And usually when that happens, that, you know, results in bid wars and thus pushing the prices higher and higher and higher. Even if there are, you know, interest rates at 6 or 7%, listen, if anything in the news shows us and the reality of the market shows us is that folks have grown callous to the interest rates being at 6 or 7%. I remember just 12 months ago when the interest rates were going up, there was panic. There was a lot of distrust. There was a lot of, you know, confusion and everything else about, you know, what's going to happen in the market. I'm afraid. Are we going to go through a crash? Blah, blah, blah. It's not going to happen. There's no crash going to happen because interest rates, even though they're at 6 or 7%, the prices of homes are not crashing. They are not going down. As a matter of fact, demand is keeping the prices elevated at that point, and there's no way that we see, you know, that demand just disappearing. And plus, you know, the predominant, you know, force behind the 2008 housing crash were the lending practices. But nowadays, that lending practice continues to be top of the line, and in a way where those that do receive loans are actually qualified to pay for those loans, not with those practices that they had back in 2008 that basically gave loans to anybody and everybody. You know, and so anyway, the point is, we don't see any crash happening. Even though the prices are up, that's actually the reality, and it's been up for some time. As a matter of fact, if I could take a look here in the sale price, let's see, just let me see each monthly data point. Here we go. In the Aurora area, we've seen here, if you can see here where my mouse is hovering, it's at 291,450. Okay, if I want to add another area and just take a look at the Chicago area, all right, let's take a look. Chicago, how do you spell Chicago? I'm just kidding. We know how to spell Chicago. All right, it's just that my keyboard is in a weird direction. But look, the prices in Chicago are at $340,000, right? So the prices have continued to be at this point. This is just 3 years data, right? And if you look at 5 years data, you can still see that prices have been steadily increasing just a little by little, okay? If you look at 10 years of data, this is where it's cool right here. You can see prices have still continued to climb in this direction, okay? This direction is where the prices have been going. There's no crazy number up and then crash. You see, that's what we're talking about here. This is what we don't see happening. So anyway, that's what I got going on here. Let me just see some of the notes here. Monthly payments have hit record highs nationally. As of a year ago, today, prices have gone up nationally. Mortgage monthly payments have increased by $121 a month. Just average, you know. That's what the news is saying here about that. So I want to let you know that, yeah, I mean, look, those that are needing to be out here buying property are out here buying property. Those that are kind of like just wishy-washy, you know, how do they call them? Folks that are just wandering, you know, looky-loos, that's the name. They're not out there, you know. They are those that are just, you know, the folks that are buying properties, the folks that are selling property, they basically need to sell the property either by a major life event or there's just a necessity that they need to get rid of it. They're not selling it just because they just want to, you know, the giggles of it. No, they actually are making the transaction happen because they need to make it happen. But the vast majority of folks already who have a mortgage, right, have it well below today's rates of 7%. Okay, so that's where we see things, and really people don't want to give up those rates because to do so would just mean you're getting another higher payment, and who wants to pay more if they already have something that is there? So unless there's a major life event, or there's a major event in their finances, whatever the case is, necessity makes them give up their home. They're not giving up their homes right now. That's just the state of affairs. If you do find a property that is out there, then you're gonna expect to at least have multiple folks trying to buy that same property. And at that point, that's when it's best for you to talk to a real estate professional who will be able to give you strategies on how to win these bid wars. And you know what? At the end of the day, as a real estate agent myself, I can let you know that we can only do as much as we can as far as presenting the offers out. But it's really the offer themselves that will make the talking for us. Because as you can see, when there's multiple deals and multiple offers going in, at the end of the day, the folks are gonna pick whatever works best for them. So yes, of course, pick out strategies, let your realtor know what you need, and let the offer speak. The realtor will do their job of filling out the contract, getting all the information in there, right? Putting in, waiving even contingencies just to make things happen. But if you are a person, if your realtor is having you get a home warranty and everything else, okay, make sure that they understand the market, and make sure that if you're in a multiple bid situation, understand that that might not be the most appealing thing to the seller for them to purchase a home warranty for, let's say the buyer, if there are multiple other offers. It just doesn't make sense at that point. Okay, so understand what's happening, and just make sure that your realtor is providing strategies that can help you win these bid wars. Okay, that's the state of affairs at this time. But yeah, we don't see many things going. As a matter of fact, we are hitting some lows when it comes to the sentiment of folks when they think about the housing market. It's very low. The morale is 8 out of 10 folks polled by Gallup, they think that it is not a good time to buy. Listen, is it a good time to buy? That's $1 million question. It depends on your situation. Again, if you just got married, right? If you're a growing family, you need a place of your own. Is now a good time to buy? Absolutely it is. It just depends on your situation. Some folks, their situation doesn't require them to purchase a home, and for them, hey, it's okay to wait it out until a more favorable time comes. But for now, it's the heat is on, and those who are prepared to handle the heat are going to be out there in the markets looking for opportunities. And when they find them, they understand that this is going to be more of a long-term game. See, if you get into the market and you think that within the first month you're going to find a home, get it on the contract and move on, you might have a difficulty understanding that, hey, it's going to take a little bit longer now because of the situation with the low inventory and the high demand that there is out there. Again, you got to just come at this with a mindset of, hey, it's going to take a little longer to get this myself into a property. Now, let's say that, for example, you are looking to make a move soon, right? You want to get rid of your property and you want to buy one. So what do? Are you going to just sell this property first and then try to buy a home? Well, let me be honest with you, okay? Currently, the challenge in the market is really buying a home. So it actually would behoove you to purchase a home first and then getting the other property sold, because right now it's easier to sell a house than it is to buy a house, right? So if you are in that situation where you want to get rid of your current home in order to upgrade or downgrade, whatever the case is, then it's best for you then to just go ahead and start looking with your real estate agent at homes. And once you got one on the contract, then at that point you're able to now put this house on the market and get this ball rolling in the right direction. Okay, so that's my advice to you as someone that has been in the real estate field for some time, and I've seen what's happening out in the field, and I've seen the mistakes that others have made, and I don't want my viewers here in this channel to make the same exact mistake. So anyway, that's what I've seen so far as the sentiment in buyers in this real estate market. I mean, they're just not liking what the state of affairs here in the market is at the moment. As a matter of fact, this week we saw that mortgage applications dipped 4.3% this week. So out of 100 folks that we thought were going to apply for mortgages this week, only 96 applied, right? So that's a number that we see here. And just because one lender said to you, hey, well, the interest rate is at 7.1 right now, because interest rates are where they are, I would advise you, and others as well have advised, to actually seek out different lenders, multiple lenders, because not all of them are exactly the same. So seek the help of other lenders and see what they can give you as far as terms and where you can better land. Okay, so look out for your own best interest and see where things land. Okay, let's see here. Still, buyer demand is outpacing supply. All right. And let's see here, 7% range looks to be the new range. Yes, with some volatility in rates, prevent a further spike. Looking in place for the better rate. Only serious buyers remain. Okay, so that's the state of affairs here this week. I wanted to record this video for you so that you can have an idea as to what is happening out here in the market. I really do hope that you enjoyed this informative video. I wanted to just bring you the news as it is happening here, so that you can be better informed. If you like this kind of material, for sure reach out to me. Let me know what you think. Hit me a like button for sure. Subscribe to the channel and let me know what else I can do for you. So with that said, thank you so much for watching, and I will catch you on the next video here next week with the market news. Until then, be smart in your choices and choose the right realtor.